Traders, welcome back to another price action training lesson. When I'm analyzing a chart relying on pure price action, the candles that are being printed on the chart, I'm always looking for correct channels because these candles on the chart, they are never alone. There is always a pattern being present and I want to follow price action rules. As you can see, we started with uptrend break new high. Right now we have a series of low highs and low lows, which means a brand new downtrend was established. However, this downtrend is not steep, it's very flat. And it's going to be important. Notice we have low highs, low lows, and market is breaking the trend channel line. Not the trend line, but the trend channel line. And this means we have overshoot. This is unnatural activity in the market because you can see how nicely the price action is oscillating inside the channel. And suddenly the push phase was too strong, far from the exponential moving average. And overshoot means, according to price action, that we can expect stronger pullback in the opposite direction. It can lead to break of a trend line or possibly even reversal. And we're going to be expecting more reversal. Why? There's a little nuance, a little tip. It's because this channel is very flat. It's not steep at all. And because the channel is so flat, by the time there's going to be break of the channel, the retracement is going to be so deep that we're most likely not going to create new extreme. So something to take into consideration, because when the channel is just too flat, not steep angle working lower, you have to think about how deep the retracement would be. And most likely there would be not retest of the new extreme. So what I'm going to do, redrawing the uptrend working higher, and you can also see this all looks like a one visual like working higher. You have a new low, first entry short, second entry short failure. So this right here is a failed second entry short. This would have been okay setup, but notice we broke below EMA first. Preferably you want to see EMA holding, providing support, and for this reason this setup is way more aggressive. But more advanced trader understands what's going on here. Uptrend is new high according to trendline rule. We had overshoot, but because it is below EMA, we cannot take a failed second entry short. Okay, we have a break new high, so right now we can still go lower, but not that likely. Let's see what's going to happen. And because market keeps trending higher, this is a good sign we're tracing too much. I'm going to be looking for potentially wider uptrend. Because what I can also do is I can zoom a little bit back, measure the first leg, copy it, put it here, and see where the possible target for prices may be. Right now, way too far up, but something to keep in mind. So when I'm watching a structure like this, EMA needs to hold if I want to expect new extreme. Okay, because there's a small chance this downtrend can get new extreme. So what's going to happen here? Okay, we have a new high, first entry long. So EMA is holding, and I would like to see second entry long. If EMA is going to hold, there's going to be second entry long cutting from the latest highest high. There will be a good sign market is going to go higher. And by the time I get a second entry long, it is just too far from the EMA. I cannot take it right into these highs, so no way for me to take an entry. There was only first entry long, which is not a high probability setup. Sometimes first entry can be, for example, just triple test or fail breakout of the congestion, but there is no other alternative here. This is just new high, first entry long here. And notice how far price action is trending higher after new extreme. So after new high, you would expect correction or reversal, and this is not happening. We have push up, push up, push up, and there's the measured move we expect. So this was the clue that I'm going to be looking for another broader channel, because the uptrend is developing. Okay, we are starting with the tight channel. As I'm getting more confirmations, EMA rejections, and so many legs working higher, this means there's another channel wider developing, and we have overshoot again. So what you're already expecting, well, you already know what to expect. You are thinking about stronger pullback in the opposite direction. So I'm going to draw short-term downtrend. I cannot go long off of this trend line, just a first entry long, and we have downtrend working lower. Okay, we have a break new extreme. Overshoot can generate stronger pullback. In order for me to go long, I will need to see strong push above EMA and some decent setup. Okay, we have a high low below EMA, but I cannot go long just yet. Okay, now we have a failed second entry short, but the signal bar is bearish. I cannot go long here. Now there's a chance for possible double bar entry, but given the overshoot, and because it can generate stronger pullback, had there been no overshoot, we can raise double bar entry. You know, I'm going to mark it more aggressive if you took this right here, but the signal bar on my chart was just really ugly, full bearish bar, and I cannot go long above bearish bar. And given the overshoot, we can have stronger pullback. You never know how strong the correction is going to be, but it's an okay-ish setup to take, but the signal bar is just not great. You would have had losing trade here, that's okay. Market continues working lower. I can widen the channel because it visually resembles broad two-legged pullback. You can see market played out with the break, new extreme. So right now what's going through your mind? This uptrend still needs new high according to trendline rule. It visually resembles as two-legged pullback down. So I'm thinking about push above EMA and high low or failed second entry short, and we cannot get it. Not even high low. Okay, definitely cannot go long here. It is not even at the EMA, inside bars, and notice it just pushed too far up. We need to see somewhere around here. There are some highs here, and we are rejecting right at this particular level. So when I'm watching this, and there is no failed second entry short, because at this point you can also see micro double tap count reset. So because we're getting rejected so much off of this resistance, remember overshoot is still kicking in, and it is taking longer for market to correct because the short-term uptrend has a break new high, strong resistance here. We already pushed way too far up. I need to be a little bit patient. I still expect new high, so I'm not selling. I just need to be patient. When I'm watching this live, I was thinking price action is going to pull back to this support, and I may buy the bottom here. But this is not happening. Market keeps trending higher. So even though we know exactly what is the directional bias of the market, the bulls are attempting to get the new high. There is just no setup. Everything is too stacked, too cluttered. EMA on these bars. So can we get some high low? And we cannot. Market is already working higher again. So remember, I want to see at this point some clean two-legged pullback second entry long. Now at this point, I can see that the resistance is transforming into support. So I was thinking that we may get second entry long to get a new high. There was only a first entry long. This is what we call a breakout pullback. Work for a quick little scalp, but I don't think you just want to risk. We want to see that second entry long. Okay, this is interesting. I can see that the market keeps creating high lows, new high, first entry long. Can we get a second entry long high low pullback above the EMA? Because EMA would show support and we still need to get the new high. And market just continue creating to push to a new extreme. And we indeed created new extreme. Another first entry long. Market created new high, so this is what I'm going to do. So right now, no good setup, but it is important for you to understand what is the directional bias of the market. You can see by following price action rules, we are able to predict exactly what may happen. And notice the measured move. Almost to the very tick, we reached the measured move. This uptrend also had a break new extreme. So this means the bullish channel played out. High lows created new high. And right now, we are pausing, looking to go long. Okay, we cannot just sell lower high. We would need at least failed second entry long. But by the time we get a failed second entry long, it is just too far down. So right now, I'm just going to be a little bit more patient. I'm going to redraw a spike and a channel pattern working lower. And because uptrend played out, we reached the measure move. This is your main focus now. The bearish push down. Okay, we have an overshoot. Again, today is a good lesson about overshoots. It can generate a strong pullback. You can see every single time the channel fits so well and you have overshoot, you can expect a little stronger pullback. Now we are breaking lower. The downtrend is new extreme, so I would be expecting a lower high confirmation setup, which here we have a lower high confirmation setup, but it formed way too far down. You can see way too into these lows. It worked, but we cannot take it. And price action keeps trending lower. And you can see at this point, when I'm zooming back, I don't really see a good case for bulls. I just see broad two-legged pullback. So it makes me think about possible bearish major trend reversal. Okay, you can see two-legged pullback, slow consolidation, new high, rapid spike below EMA, and it looks like the bearish trend may be a brand new trend established. So this is possibility to draw a broad channel. But in order for me to trust this broad channel, I would need some confirmation setup. Because remember, we don't have third swing confirmation. This channel just played out with the breaking extreme. So if I'm going to get a second entry short, just like I have a second entry short here, this is not enough confirmation for me to just take it. Okay, this looks like one push down, break, second push down. I have no third swing confirmation. So when I find myself in a situation like this, when I'm thinking about possible wider channel, but the channel is not confirmed, what setup are you going to use to confirm your analysis? It's going to be the lower high confirmation setup or potentially double trap. So you have a new low, first entry short, second entry short, uptrend played out with the break and the new extreme. There's some resistance being formed, okay. and now we have a lower high. Okay, I'm gonna zoom in, new low, first entry short, second entry short. We stay below EMA, pull back higher, still below EMA, great lower high confirmation setup, and this is great high probability setup because now you can trust the wider downtrend, the smaller trend range, and it confirmed the second entry short. And this is the last piece of information that the market's gonna continue to work lower. So this is a great lower high probability setup. Small stop loss, only 1.5 point signal bar. I actually took this setup myself and I managed to get quite a decent runner. So you can see you can just easily trail it and get some nice run out of it. We have another overshoot. So today we can see quite a few overshoots. Now this channel is getting quite strong, I mean the downtrend. So I was thinking, hold on, the overshoot is so tight, what if the overshoot is not really there? But it is not so clear to decide. Let's see what's gonna happen. Okay, the new low first entry short, and now we have second entry short and almost visual triple test again, visual double test, but we can sort of consider it as a triple test. Now we are after overshoot, so we have to take into consideration many things. Sometimes, and this is quite experience-based entry based on gut feeling, the broader those two legs are, the less overshoot is impactful. Okay, if you remember when we had the downtrend working lower, we had a felt second entry short and it looked visually like a one leg working higher. This looks like a two broad separated legs, and the more separated those legs are after overshoot, the less the overshoot has an effect in the market. So this is a decent setup because it is a great signal bar. You're right at the EMA. If you were patient here, I can see why. I didn't take it myself. I was itching to take it. I just didn't see the resistance in time. Everything happened so fast. But because those two legs are so broad, this is a decent high probability setup. Remember, we are only interested in scalp, so there's a big chance that market's gonna go a little bit lower here. It worked for quick easy scalp, 3.25. We're scalping for 8 ticks. We're breaking the channel, so remember, I'm gonna redraw always the short-term channel. Let's see what the market's gonna do. I cannot take lower high, this uptrend is new high, but we're breaking strongly below EMA. Now, what is your market analysis? Us using price action rules, the downtrend is the main bias in the market. So according to rules, I want to see new extreme. Now, we don't have a new high of this uptrend, which is concerning. But if there's going to be felt second entry long, now I was going back and forth, I'm gonna take it. But once the signal bar closed so big on its low, such a tier 1 signal bar at the EMA, I took this setup myself. It is a little bit more aggressive because this uptrend doesn't have new high. But you have so many reasons to expect market to go lower. I actually took this setup as well, even though it is a little bit more aggressive. It worked exactly for 9 ticks. We're scalping for 8 with the limit order here. I actually had my limit order a couple of ticks back, so I got out really well. But if you hold it a little bit more, you would have gotten stopped out here. But this was exactly for 9 ticks. We scalp 8, and you are really not supposed to be holding it more because this uptrend doesn't have new high. Okay, so you're taking a little bit more risk. This is why it is a little bit more aggressive, because after overshoot, you know, there can be chance that this uptrend may get a retest. So just something to think about. If there's a clear break new high, you can definitely expect the swing break to new extreme. Okay, a lower high, strong push below EMA. So at this point, it is starting to be obvious that sellers want to see the new low tested. This is the lowest low, first entry short, and we have a pullback, second entry short. So this right here is a second entry short. This was really important here. The fact that this lower high didn't even test the new high and we push strongly below EMA. This is a big sign that the sellers right now want to see the new low because there was such a massive push below EMA. There's no way the bulls are going to go higher. The downtrend is too strong. It's a second entry short and market continues to go all the way down here. We created the new extreme, so we are pausing, looking to sell. At the same time, there's going to be a felt second entry short above EMA. We cannot take because the downtrend was just long in decent pattern. So I'm pausing to sell after new extreme, and I can see that right now, yeah, it's getting way too late. Wow, but market continued to work lower. Looks like there's still a little bit of a flatter channel as well developing, but it's already way too late anyway. So far today is Wednesday and this week was quite lackluster and didn't look that great at the beginning of the session. And I really didn't think I was gonna get a lot of setups, but after uptrend played out, and the price action was perfect, everything played out exactly according to price action rules, just that there weren't that many opportunities. But after this downtrend started, there were a lot of great setups, everything went back to normal, key entry points, trendline rule, a lot of great opportunities on the way down. So it just goes to show that you always have to be prepared because you never know when the market is going to turn the corner and good high probability setup is going to appear. Price action rules that we trade here on this channel, they work in every single market and on every single instrument. And since the ES has been quite slow lately, I've been watching on the side 1500 tick chart Nasdaq and 500 tick chart CL. So if you are interested in supplementing and you want to trade a little bit more instruments, if you can handle it, if it's not too distracting for you, you can also use the same price action rules. We're going to take a look, for example, at 500 tick chart CL. So this right here right now is 500 CL tick chart, and we can see trendline rule works perfectly. Key levels are established, and I marked a lot of high probability setups. You can see uptrend break new high, downtrend break new low, great second entry short, failed second entry short. Price action rules work exactly the same. If I didn't tell you what kind of instrument this is and what time frame it is, you still would think that it is exactly what we trade every single day, the ES. And that's the beauty of price action. It works the same on every single market. So if you learn this skill, you're equipped to be able to trade every single instrument. But make sure you can handle trading multiple instruments at once. Me, myself, I'm still watching this on the side, trying to make sure it is not too distracting. It is really good for traders who are struggling with being patient, because if you are waiting for high probability setup on just one instrument and you're not that patient, even though it is a skill you should develop, watching a couple more instruments can actually be helpful, because there can be more high probability setups overall because you want everything to align, and now you get more opportunities for price action to align if you're watching a little bit more instruments. But you need to make sure you can test it if it is not too distracting. So I'm going to wrap it up. I hope you had a good trading day, and I'm going to talk to you next time. Good luck with your trading.